Howdy guys, Jimmy Song here. Welcome to a special episode of Off Chain. I am going to read the Libra white paper and tell you what I think about it. I haven't read it yet. I heard about the news this morning and I wanted to do something to figure out what's going on. Let me just put in my earphones here, just in case like someone comes on or something like that. Let me also close the door. Give me one sec. So I'm going to go through the Libra white paper, see what I can glean from it. I do have some thoughts as far as what their partners mean and what's going on here. If you haven't heard about it, basically Libra is the coin that Facebook created. It looks like David Marcus has been working on this for a very long time. David Marcus was, of course, the president of PayPal, and when he got hired, this was something that a lot of people were speculating would mean like some sort of integration with Bitcoin. So it looks like Tone is here. Tone, how's it going? Can you hear me? Okay, well, all right. So we'll figure that out. Anyway, let me share with you the screen, and I will start just reading it. Tone, can you hear me? Okay, well he's all right. So he's we'll see if he joins me. All right. So here is the official Libra white paper. I put a link in the show notes, and you can take a look at it from there. All right, let's go through. Okay, it says, welcome to the official Libra white paper. First of all, it's not done in tech. Well, I don't know, maybe the PDF is easier to read or whatever, but let's just scroll through this, see what happens. Libra's mission is to enable a simple global currency and financial infrastructure that empowers billions of people. This is a completely meaningless statement. None of those terms really mean anything. Yeah, I can hear you, Tone. Can you hear me?
Yep. Can you hear me good? I'm gonna let you speak.
Yeah, I can hear you pretty good. I think the chat can hear you pretty good as well.
All right, I'm gonna mute because I'm literally in a van. But after that, I'll try to join.
Okay, sounds good. All right, so let's go through this a little bit. This document outlines our plans for a new decentralized blockchain, a low volatility cryptocurrency, and a smart contract platform that together aim to create a new opportunity for responsible financial services innovation. All right, so first of all, we see a few claims here. They're claiming to be decentralized. You guys already know that my personal perspective on things is that it is very difficult to get anything to be decentralized. So we'll see if their claims hold up to some scrutiny. That it is a blockchain, that is a chain of blocks. It's a specialized database that they're using. Low volatility cryptocurrency. So they're saying that it's going to be pegged in some way to something. We don't really know what yet. Smart contract platform that together aim to create a new opportunity for responsible financial services innovation. So the key word here probably is responsible. They are trying to figure out a way to sort of gatekeep from all the scams. So, I mean, it sounds like what everyone has been trying to do, which is some sort of playground where you can make different kinds of apps without all of the scamminess that's associated with ICOs and so on. So, all stuff that you would kind of expect. We'll see if their claims hold up to scrutiny. Here's the problem statement. The advent of the internet and mobile broadband has empowered billions of people globally to have access to the world's knowledge and information, high fidelity communications, and a wide range of lower cost, more convenient services. That much is true. These services are now accessible using a $40 smartphone from almost anywhere in the world. That is also true. This connectivity has driven economic empowerment by enabling more people to access the financial ecosystem. Working together, technology companies and financial institutions have also found solutions to help increase economic empowerment around the world. This is, I guess, a pat on the back to David Marcus's previous company, PayPal. Despite this progress,
Hey, Jimmy,
yeah.
Just a quick thing. There their summary at the very top is already a
Mhm.
contradiction, right? You can't
Mhm.
have a decentralized system and at the same time a stable currency and control of everything. Like the whole statement starts with a monster contradiction. That's all I wanted to say, and go on.
Yeah,
Go
yeah.
ahead.
I mean, there's definitely a central banker's trilemma and a whole bunch of other stuff. So, I mean, they definitely are aiming to have some sort of free capital flows. They're trying to peg to a currency, and they are trying to have their own monetary policy. Good luck with that. No central bank in the world has solved that, and it's theoretically it sounds like impossible. But we'll go through. Let's keep going here. Despite this progress, large swaths of the world's population are still left behind. 1.7 billion adults globally remain outside of the financial system with no access to a traditional bank, even though 1 billion have a mobile phone and nearly 500 million have internet access. Well, okay, yeah. So, I mean, I guess this is basically stating that there's a bunch of people that don't have bank accounts, and somehow this is a really bad thing. Okay, fine. Let's just keep going here. For too many, parts of the financial system look like telecommunication networks pre-internet. 20 years ago, the average price to send a text message in Europe was 16 cents per message. This much is true. Now, everyone with a smartphone can communicate across the world for free with a basic data plan. Back then, telecommunications prices were high but uniform, whereas today, access to financial services is limited or restricted for those who need it most, those impacted by cost reliability and the ability to seamlessly send money. Yeah, I mean, this is kind of, I mean, I guess they're arguing that there's nothing kind of like digital cash out there. If only there were a decentralized network of way to store value or something like that, maybe like a coin that nobody controls. I mean, I mean, the problem statement so far is more about Bitcoin than anything else so far. All over the world, people with less money pay more for financial services. Hard-earned income is eroded by fees, from remittances and wire costs to overdraft and ATM charges. Payday loans can charge annualized interest rates of 400% or more, and finance charges can be as high as $30 to borrow $100. When people are asked why they remain on the fringe of the existing financial system, those who remain unbanked point to not having sufficient funds, high and unpredictable fees, banks being too far away, and lacking the necessary documentation. Yeah, there's definitely a part of this which is yeah, a lot of the unbanked people, they don't have like credit histories or scores. So it is very hard to get loans and they don't really have collateral. Yeah, I mean, this is true of almost all poor people. They don't really have stuff. So, I mean, the problem statement so far seems reasonable as far as it goes. All right, now here we go. Blockchains and cryptocurrencies have a number of unique properties. Actually, I've been focusing on tone, haven't I? All right, so let me let me put it back to me. Blockchains and cryptocurrencies have a number of unique properties that can potentially address some of the problems of accessibility and trustworthiness. These include distributed governance, which ensures that no single entity controls the network; open access, which allows anybody with an internet connection to participate; and security through cryptography, which protects the integrity of funds. Okay, all right. So there's already some weirdness here. Blockchains and cryptocurrencies have a number of unique properties that can potentially address some of the problems of accessibility and trustworthiness. These include distributed governance. Distributed governance. That, well, I mean, with Bitcoin, there's really no governance, right? So this phrase, distributed governance, is clearly setting up for something later. I think they're supposed to have some sort of proof of stake system, and they're conflating distributed governance with decentralization, which is precisely not the case, which ensures that no single entity controls the network. Yeah, so it's a federated system, supposedly. But we'll see where that is by the end of this. But yeah, let's see if this claim holds true. Open access, which allows anybody with an internet connection to participate. Is that really true? We'll see. I mean, if a drug dealer comes on this network, are they going to ban this person, or are they going to allow it? We'll see if this is really open access. and security through cryptography, which protects the integrity of funds. So they're conflating a couple of things. Security through cryptography typically means something like ECDSA or public key cryptography, which can validate that you actually control a particular private key. Integrity of funds is a little bit different. That's like being able to spend something that really belonged to you. You don't know if it's stolen or not. So I mean, these are all issues that Facebook's going to have to deal with, and all of these federated organizations. All right, but the existing blockchain systems have yet to reach mainstream adoption. I would totally beg to differ, and I think this is where they're kind of going off the rails here. Mass market usage of existing blockchains and cryptocurrencies has been hindered by their volatility and lack of scalability, which have so far made them poor stores of value and mediums of exchange. Okay, completely disagree here. They're saying that Bitcoin apparently is a very poor store of value. Anybody that stored any value in Bitcoin, other than maybe a short window between 10,000 and 19,000, has made money on it, and it's stored value very well. So I mean, the volatility is part of the fact that it's not pegged to anything. Lack of scalability, you can still get in transactions right now if you wanted to for very cheap. I mean, other than a very short window within maybe a couple of months where, in December of 2017, this really hasn't been much of a problem. So, this part is mostly FUD. Some projects have also aimed to disrupt the existing system and bypass regulation, as opposed to innovating on compliance and regulatory fronts to improve the effectiveness of anti-money laundering. I mean, that's kind of the point, right? They're talking about open access up here, and immediately they're saying, well, the open access is bad because it's bypassing regulation. That's the whole point of open access. What the heck? All right, so some contradictions already. All right, we believe that collaborating and innovating with the financial sector, including regulators and experts across a variety of industries, is the only way to ensure that a sustainable, secure, and trusted framework underpins the new system. Again, open access, which allows anybody with an internet connection to participate. Once you include regulators and people like that, you are completely undermining the entire point. You can't have both, right? Like, if you're going to have regulators, then you're not going to have open access. If you're going to have open access, then you can't really bring in regulators because they control access. So this doesn't make any sense whatsoever. Okay, so they're already contradicting themselves right here between this and this. I mean, I think they're already arguing for some sort of like a more regulated cryptocurrency, which is exactly what fiat already is. So I don't know what the innovation is here. And this approach can deliver a giant leap forward toward a lower cost, more accessible, more connected global financial system. Well, it's not going to be more accessible. Cash is more accessible than this framework already, because you have regulators and experts across a variety of industries, right? Collaborating and innovating, right? They're collaborating with regulators. Read, we are going to let the government control this thing, okay? So it's not decentralized in any way already, because that, even in their problem statement, they're already stating that this is all about using, like collaborating with regulators and, not about open access, despite their claim to it in the previous paragraph. And this approach can deliver a giant leap forward toward a lower cost, more accessible, more connected global financial system. I don't think this is right. I mean, it could be lower cost possibly. It's definitely not more accessible because Bitcoin is way more accessible. More connected, okay, that might be true. I mean, certainly that's Facebook's strength, is connecting different people and making sure that you're keeping up to date and so far. All right, so let's look at the opportunity. As we embark on this journey together, we think it is important to share our beliefs to align the community and ecosystem we intend to spark around this initiative. We believe that many more people should have access to financial services and to cheap capital. Cheap capital, okay, read, okay, newly printed money. So apparently they want to be able to loan out to poor people instead of exclusively to the rich people, which is mostly what happens in a fiat system when they print money. The new money gets loaned out to rich people and they get to do whatever with it. We believe that people have an inherent right to control the fruit of their legal labor. I do too. I mean, I would love to do that, except they're collaborating with regulators. So I don't understand how they control you control anything if the regulator has the right to take it away. We believe that global, open, instant, and low-cost movement of money will create immense economic opportunity and more commerce across the world. I totally agree with that. And that should happen. Unfortunately, we have capital controls and so on, and regulators that do that very thing. So I don't understand how adding regulation or collaborating with regulators is going to make it more open. Okay, we believe that people will increasingly trust decentralized forms of governance. Okay, decentralized and governance don't go together. This phrase right here, decentralized forms of governance, is an oxymoron. If you are governing something, it is not centralized, right? Governance, that means somebody is in control. Decentralized means nobody's in control. This is an oxymoron. We believe that a global currency and financial infrastructure should be designed and governed as a public good. Okay, so a lot to unpack in this one, but basically what they're saying is governed as a public good. So they admit to needing some sort of central point, and yet they're claiming to be decentralized. So this doesn't make any sense, right? Like they're saying that it's going to be governed as a public good. So somebody needs to be governing it, right? Who's it going to be? Well, yeah, how about us? Facebook and some Visa and MasterCard and everybody that's, benefited hugely from the current fiat system. Yeah, I'm going to throw up or something. All right. We believe that we all have a responsibility to advance financial inclusion, support ethical actors, and continuously uphold the integrity of the ecosystem. Yeah, this is a feel-good statement. Yeah, we're going to advance financial inclusion, by bringing in regulators, right? Like, and where we can just take away poor people's money if we don't like them or whatever. This is a ridiculous statement, and this particular sentence is just a feel-good statement that doesn't say anything. All right, introducing Libra. Let's see how it actually works. The world truly needs a reliable digital currency and infrastructure that together can deliver on the promise of the Internet of Money. Obviously, stealing from Andreas Antonopoulos' book right here. And apparently, they don't think that Bitcoin delivers on this promise, and they don't think it's reliable, despite Bitcoin having had like uptime of like 99.999% or something like that. And that apparently the infrastructure that Bitcoin has, they don't agree with or something like that. Well, we'll see what theirs is like. Securing your financial assets on your mobile device should be simple and intuitive. Yeah, that much is true. I think my wallet's kind of intuitive, but I don't know. Moving money around globally should be easy and cost effective and even more safe and secure than sending a text message or sharing a photo, no matter where you live, what you do, or how much you earn. Okay, yeah, that would be nice if you had that kind of safety and security. And generally we do, but it really depends on who you're sending to. The people that are scamming you isn't the network itself most of the time. It's the people on the other end. So I'm not sure how this is really actually relevant. New product innovation and additional entrance to the ecosystem will enable the lowering of barriers to access and cost of capital for everyone and facilitates frictionless payments for more people. Yeah, this has been true forever, except you have all of these like middlemen that have been taking, some percentage of the transaction. If you know anything about credit cards or debit cards or almost anything, they make money by taking a small percentage of whatever goes through their system. So, I mean, this has been true forever. I mean, would it be nice to disintermediate them? I mean, that might be the main point of Libra here. So, I mean, that I can buy a little bit. Now is the time to create a new kind of digital currency built on the foundation of blockchain technology. Yeah, buzzwords. The mission for Libra is a simple global currency and financial infrastructure that empowers billions of people. Completely meaningless. Libra is made up of 3 parts that will work together to create a more inclusive financial system. It is built on a secure, scalable, and reliable blockchain. We'll see how those things stand up to scrutiny. It is backed by a reserve of assets designed to give it intrinsic value. Ooh, okay, so we're learning something here. A reserve of assets. So this means that they're going to have something, whether it's dollars, gold, or euros or something. It's going to have something that's going to back it. So presumably you'll be able to convert it, or somebody will be able to convert Libras to whatever this reserve of assets are. Otherwise, it's kind of a meaningless statement to say that it has intrinsic value. It is governed by the independent Libra Association tasked with evolving the ecosystem. All right, so independent Libra Association. We'll have to figure out exactly what that means later in the white paper. The Libra currency is built on the Libra blockchain. Okay, so they have their own blockchain. Because it is intended to address a global audience, the software that implements the Libra blockchain is open source. Oh, okay, that's good to know. It's open source. They don't tell you who can contribute to it or anything. I think by their definition of open source, it is basically you can go read the code yourself. Okay, good. I like that you can do that, but who gets to contribute, right? Like that's actually a different part of open source that they haven't said anything about yet. Designed so that anyone can build on it and billions of people can depend on it for their financial needs. So they're hedging here. They're not saying that anyone can contribute to the actual open source code. It's Facebook, presumably, that's going, or their partners that get to control the actual code. But you can at least look at it, which to me is kind of pointless. You should be able to contribute to it if you are so able. Designed so that anyone can build on it and billions of people can depend on it for their financial needs. Okay, I mean, anyone can build on like PayPal API too. I mean, I don't understand how that's any different there. If you can just read the code, that's just saying, okay, here's the software. That's about it. Imagine an open, interoperable ecosystem of financial services that developers and organizations will build to help people and businesses hold and transfer Libra for everyday use. Yeah, that's called cash. I don't really, I mean, yeah, I don't see anything new there. With the proliferation of smartphones and wireless data, increasingly more people will be online and able to access Libra through these new services. Not sure what the new services are. I guess it's whatever people are going to build. Just like every ICO and new smart contract platform, they're depending on other people to build on top of it. Sort of like having some sort of open standard means that other people will build on it and so on. I'm sure they'll find out soon enough that unless you incentivize them greatly, they're not going to build anything. To enable the Libra ecosystem to achieve its vision over time, the blockchain has been built from the ground up to prioritize scalability, security, efficiency in storage and throughput, and future adaptability. All right, so here are their goals right here from a technical standpoint: scalability, security, efficiency in storage, and future adaptability. You don't see anything about unconfiscatability in there, right? That's not a particular design goal that they have. You don't have any. So, I mean, they're collaborating with regulators. So, I mean, if you keep your money in Libra, presumably they'll be able to seize it or something like that. But I mean, I'll withhold judgment for now. Let's just keep reading. Keep reading for an overview of the Libra blockchain, or read the technical paper. I just want to see what's in there. Okay. Downloads. All right. So I am going to see what's in here. Okay. So there's a second. I might need to have a second broadcast to read through this thing. But yeah, there's at least that. All right, so let's keep going. The unit of currency is called Libra. Libra will need to be accepted in many places and easy to access for those who want to use it. Okay, yeah, that's true of any currency that you're making up. It needs to be accepted in many places to be used as a method of payment, and that seems to be the big goal here. In other words, people need to have confidence they can use Libra and that its value will remain relatively stable over time. Yeah, stable with respect to what? That's the real question here. You can be stable to gold or shares of Facebook stock or something like that. But stable is a very relative term, so I'm not sure what they're saying. Presumably it's with the US dollar or something like that. Unlike the majority of cryptocurrencies, Libra is fully backed by a reserve of real assets. Okay, so it's presumably something like a stable coin. We're not really sure yet. A basket of bank deposits and short-term government securities will be held in the Libra reserve for every Libra that is created, building trust in its intrinsic value. Okay, right here is where their claims of decentralization are completely null and void. Completely null and void. Because this entire reserve has to be held somewhere, and somebody can always go and take that away, right? And at that point, it hampers convertibility, and that means that it no longer has that reserve. So that's completely centralized by any definition. If it's held in one place, that means that it is not decentralized, right? It's centralized, right? All of the reserves are somewhere. That means that it's that means it's centralized. Somebody can seize it. If the Libra reserve is in the United States, that's a complete central point of failure. Complete place where somebody can come in and regulate the hell out of it, seize it, steal from it, do whatever. So this is completely ridiculous. Tone, you want to say something?
Hey, Jimmy. Yeah, hey. Sure. I am not surprised by any of this. The better way you can see where I am right now. I am in Iceland. I am not surprised by anything you've read so far. Are you?
Surprised is a relative term. I didn't know that much about it. Like coming in, I had read some things, and this is my first time.
No, but are you? Okay, let me rephrase it. Is there anything there you read that you did not expect to read up to this point?
No. We knew that if they wanted to be some sort of a payment rail, then they would have to peg it to something, and this is the exact problem that they're running into.
In fact, this is so much worse. Honestly, I thought somebody at Facebook that what contributed to this paper was borderline smarter. Not only is this just a hodgepodge of contradictions and buzzwords, it's it sounds like they don't know what they're doing. Well, it's worse than what they could have done in a centralized way.
Yeah. Well, it's kind of is centralized, right? Let's keep reading and then see where we are. But this sentence right here, pretty much disproves that it's in any way decentralized. There's a reserve. That means that there's a central point
one more time.
It says a basket of bank deposits and short-term government securities will be held in the Libra reserve for every Libra that is created, building trust in its intrinsic value. You've given up all claims to decentralization if this is true. All right, the Libra reserve will be administered with the objective of preserving the value of Libra over time. Keep reading for an overview of Libra and the reserve. Read more here. Okay, so they have a second link here, the Libra reserve. All right, let me go back to that. Where were we? White paper, the Libra blockchain. I wasn't quite there yet. Yeah, so I need to open this in a new tab. Okay, so the Libra reserve, purpose of the reserve, how's it? So I might need to have another. Yeah, we'll have to. This white paper reading is going longer and longer. But anyway, let's just keep going here. The Libra Association is an independent, not-for-profit membership organization headquartered in Geneva, Switzerland. Okay, another central point of failure. Libra Association is apparently seizable by the government of Switzerland if somebody invades it or something, they can totally go and get it. The association's purpose is to coordinate and provide a framework for governance for the network and reserve and lead social impact grant making in support of financial inclusion. All right, so let's break this down. Coordinate and provide a framework for governance. Okay, I thought you were decentralized. Okay, if you have a framework for governance, it's obviously controlling something, right? You're governing over something, and that means it's a single point of failure. That means you're not decentralized in any way, shape, or form. For the network and reserve. Okay, so they're also responsible for the reserve. So if you can take over this association, you apparently have control of the reserve. And lead social impact grant making in support of financial inclusion. Okay, I've said this before. It's almost always a bad sign when a coin is saying we're going to do social good this way or that way, or we're going to donate to these people that doing something or other. It's almost always a bad sign because they feel the need to virtue signal in some way as a way to get people to say, okay, it's fine to work on this or like be on our platform because, you know, they're making a difference in, you know, some African child's life or something like that. So this is a very negative signal for me. This white paper is a reflection of its mission, vision, and purview. The association's membership is formed from the network of validator nodes. Okay, so this is something that we haven't encountered yet that operates the Libra blockchain. So apparently there are validator nodes on the Libra blockchain, which suggests that this is proof of stake. And I had heard that already. So they are using some membership. And I think this is what costs $10 million to be in is to be a validator node. So you get a stake, right? Like, and you get to sign off on it or something like that. All right. Members of the Libra Association will consist of geographically distributed and diverse businesses, nonprofit and multilateral organizations, and academic institutions. Oh yeah, this is very decentralized, right? I'm being very sarcastic here. You know, I mean, what really? Like geographically distributed and diverse businesses, nonprofit and multilateral organizations, and academic institutions. Sounds exactly like the kind of people that I want controlling my money. I mean, not. That's exactly who controls the money right now. So this doesn't make any sense. The initial group of organizations that will work together on finalizing the association's charter and become founding members upon this its completion are by industry, payments, MasterCard, PayPal, PayU, I don't know who that is, Stripe, and Visa. Yeah, these are exactly the type of people that you want on your side. I mean, I'm guessing though that this is more for interoperability and quick in and out. So, I mean, I guess these are sort of like the exchanges on the Libra marketplace or something. Technology and marketplace, Booking Holdings, I don't know who they are. eBay, Facebook, obviously. Farfetch, I don't know. Lyft, Uber, Mercado Pago, and Spotify. So apparently, you'll be able to use Libra in these people. Notably absent are places like Amazon, and you know, like I don't know, like Dell or something. Like places that you'd actually want to use it for. Yeah, not really tech marketplaces that you would. eBay is good, but. And I guess it's hard to get a credit card in like a third world country. So maybe you can get on Libra or something like that. That's the idea. Telecommunications, Iliad and Vodafone Group. This reminds me of M-Pesa in Kenya. I'm sure that having like a mobile provider as a way to get onto Libra is probably what they're thinking. Blockchain, Anchorage, Bison Trails. I have no idea who those are. Coinbase. So apparently they will allow for exchanging. Zappo Holdings Limited. That one is pretty surprising. I'm going to have to talk to Wences about that. I don't know what they're thinking or what their role is. Hopefully they're basically just maybe like Bitcoin is one of the reserve assets and they are securing it for them or something like that. I really hope they're not involved in this. Venture capital, Andreessen Horowitz, Ribbit Capital, Thrive Capital, Union Square Ventures. Yeah, all these guys have been blockchain, not Bitcoin, for a long time, so this is not a surprise. Yeah, I mean, it's like this is all just sort of virtue signaling or something like that. Nonprofit and multilateral organizations and academic institutions. Creative Destruction Lab, Kiva. Okay, I'm very familiar with them. Mercy Corps, Women's World Banking. So this is the part where they get to say, see, we're doing actual good with our Libra. We're going to donate to these places. Kiva is interesting, though, because I guess you can take out a loan in Libra. Of course, it's going to be very hard for them to pay it back if they happen to need to, or they happen to be in a country where the currency is very inflating and they have to use that and they can't earn as much and so on. So this could be pretty bad. We hope to have approximately 100 members of the Libra Association by the target launch in the first half of 2020. Okay, so I guess they're going to make like $1 billion because each of them is going to have to run a validator node, I think, and 100 times 10 million is $1 billion. Facebook teams played a key role in the creation of the Libra Association and Libra blockchain, working with other founding members. While final decision-making authority rests with the association, Facebook is expected to maintain a leadership role through 2019. Facebook created Calibra, a regulated subsidiary, to ensure separation between social and financial data to build and operate services on top of the Libra network. Yeah. I mean, so this is something that like we should be very wary of. We know how much Facebook likes to give away their data or sell that data, and they're trying to say, okay, well, we're not going to sell your financial data because that's obviously very, very private. We double pinky swear promise that we're not going to be selling that data, and we're going to have a wall between Facebook and Calibra. This is very similar to all these investment banks saying we're going to make sure that the investment part is not going to talk with the asset management part or something like that, or some other part of the bank where it would be illegal, and we pledge, and that's our word is good enough, right? Like this is obviously ridiculous. Once Libra Network launches, Facebook and its affiliates will have the same commitments, privileges, and financial obligations as any founding member. As one member among many, Facebook's role in governance of the association will be equal to that of its peers. Sure it is, Facebook. Sure it is. Yeah, I mean, it's not like you created the place and you're recruiting all these association members and you're not going to have a special place. Sure you're not. Sure you're not. Like this is a completely ridiculous statement on its face. Blockchains are described as either permissioned or permissionless in relation to their ability to participate as a validator node. Okay. In a permissioned blockchain, access is granted to run a validator node. In a permissionless blockchain, anyone meets the technical requirements can run a validator node. In that sense, Libra will start as a permissioned blockchain. Okay, so that's significant. So basically, in order to be a validator node, you have to be in their exclusive club to do so. So that's rather telling that like you need permission in order to do this. I thought it was all about open access, but apparently,
hey, Jenny,
it's a complete contradiction. Yeah,
Jenny, this sounds
a lot.
This sounds a lot. I'm actually behind a waterfall right now. This actually sounds awesome. It sounds a lot like Ripple.
It does it? Well, so it's I mean, I think they have a lot more traction than Ripple, but yeah, it does sound a lot like Ripple so far.
I'll let you keep going.
All right. To ensure that Libra is truly open, yeah, you already just said it's a permission blockchain. I don't know how it's truly open in any sense of that word, and always operates in the best interests of its users. You have a Libra Association and governance. How the heck are you going to account for the users? Our ambition is for the Libra network to become permissionless. Okay, so you're going to start permission and then become permissionless. All right, let's see how that's going to be. The challenge is that as of today, we do not believe that there is a proven solution that can deliver that scale, stability, and security needed to support billions of people and transactions across the globe through a permissionless network. So it's going to be regulated. It's going to be permissioned. It's not really decentralized. There's multiple foundations and associations. It sounds like you can't contribute to the code unless you are at Facebook. So, I mean, it's definitely a permissioned, closed, walled garden, which is something that Facebook is very familiar with. One of the association's directives will be to work with the community to research and implement this transition, which will begin within 5 years of the public launch of the Libra blockchain and ecosystem. So at some point in the future, 5 years is a lifetime in any sort of cryptocurrency. There's going to be research and implement this transition. So somehow they're going to go from permission to permissionless, and nobody really knows how it's going to happen, but that's what they're aiming to do. So they're putting a carrot out there saying we're going to be permissioned at some point in the future, but we don't know exactly how, and we're going to put a committee to do it. I mean, does this sound like government bureaucracy or what? Essential to the spirit of Libra in both its permissioned and permissionless state. I mean, they haven't described the permissionless state in any way, shape, or form. The Libra blockchain will be open to everyone. No, it's not. You already said it's permissioned, so it's not open to everyone. Any customer, developer, or business can use the Libra network, build products on top of it, and add value to their services. No, you have a permissioned blockchain. You need permission to get on the platform. So that means that it's not open to everyone. So this is a complete contradiction. Open access ensures low barriers to entry and innovation and encourages healthy competition that benefits customers. It's not open. You just said it's not. You said it's permissioned, and you have some plan in the future 5 years from now to make it permissionless, but this is not open in any way, shape, or form. So this is a complete lie right there. This is foundational to the goal of building more inclusive financial options for the world. Okay, that's just kind of a meaningless feel-good statement. All right, section 3, the Libra blockchain. Oh man, I'm not even halfway through this yet, huh? We'll keep going. The goal of the Libra blockchain is to serve as a solid foundation for financial services, including a new global currency which could meet the daily financial needs of billions of people. So it's not about open access. It's not about permissionless. It's just about making sure that people are using this new global currency. That's what it sounds like. Through the process of evaluating existing options, we decided to build a new blockchain based on these 3 requirements, okay? Ability to scale to billions of accounts, which requires high transaction throughput, low latency, and an efficient high-capacity storage system. Highly secure to ensure safety of funds and financial data. Flexible, so it can power the Libra ecosystem's governance as well as future innovation in financial services. So there's a centralized component, which is the governance, which allows it to scale and be efficient and stuff like that. But again, you are trusting the Libra Association, Facebook, and many others, whoever's holding the Libra Reserve and so on, to keep this value. So none of it is, there's nothing about decentralization, despite like stating it multiple times, it's not decentralized in any way. The Libra blockchain is designed from the ground up to holistically address these requirements and build on the learnings from existing projects and research, trying to make them seem like some sort of evolution, a combination of innovative approaches and well-understood techniques. This next section will highlight 3 decisions regarding the Libra blockchain. Designing and using the Move programming language. Okay, so there's a new smart contract language. Using a Byzantine fault-tolerant consensus approach. Again, it's a permission blockchain, so I'm not sure why you need Byzantine fault tolerance. You have to invite people in, and presumably they're already trusted, so it doesn't really make sense. Adopting and iterating on widely accepted blockchain data structures. Okay, It's called the database, so I'm not really sure what they're saying. Move is a new programming language for implementing custom transaction logic and smart contracts on the Libra blockchain. Because of Libra's goal to one day serve billions of people, Move is designed with safety and security as the highest priorities. Move takes insights from security incidents that have happened on smart contracts to date and creates a language that makes it inherently easier to write code that fulfills the author's intent, thereby lessening the risk of unintended bugs or security incidents. So, I mean, they're at least improving on Ethereum. It's not a crap language like Solidity. Specifically, Move is designed to prevent assets from being cloned. It enables resource types that constrain digital assets to the same properties as physical assets. A resource has a single owner. It can only be spent once, and the creation of the new resources is restricted. So they're fixing the double spending problem. I think that's already been fixed, guys. Has a single owner. Yeah. Oh, I mean, I guess maybe multi-sig isn't supported. And the creation of a new resource is restricted. Okay, so you can't just create new assets willy-nilly. I guess you need permission from somebody. Yeah, sounds like a very open system. The Move language also facilitates automatic proofs that transactions satisfy certain properties, such as payment transactions, only changing the account balances of the payer and receiver. Okay, so I mean, this is what Bitcoin already does. I mean, I guess, Ethereum or some other chains do something different. I'm not really sure. By prioritizing these features, Move will help keep the Libra blockchain secure. Okay, we don't really know much about the actual language. They're just saying these are the claims that they want to have about it. By making the development of critical transaction code easier, Move enables the secure implementation of the Libra ecosystem's governance policies, such as the management of the Libra currency and the network of validator nodes. So, I mean, basically, this is a way to make sure that the governance goes through. So if, say, a regulator comes in and says, stop this transaction, I guess Move's language will say, okay, you're not allowed to validate that transaction. And yeah, we can stop it. So it's not censorship resistant at all. Move will accelerate the evolution of the Libra blockchain protocol and any financial innovations built on top of it. Okay. I'm not sure how I don't know in which direction it's accelerating the evolution. It just sounds like it's like Fiat 2.0 at this point. We anticipate that the ability for developers to create contracts will be opened up over time in order to support the evolution and validation of Move. I mean, okay, opened up over time. So I guess it's very restricted at the beginning. You need their permission to even create a smart contract. And then it's at some point in the future, I guess developers will be able to create contracts. This is like completely against what they said earlier, which is that anyone will be able to build on it. No, you need Facebook's permission or Libra Association's permission or something like that before you can even create a contract, is what that sounds like. To facilitate agreement among all validator nodes on the transactions to be executed and the order in which they are executed, the Libra blockchain adopted the BFT approach by using the Libra BFT consensus protocol. So I guess they want some Byzantine fault tolerance for some reason. And I don't really understand why, since everybody in the network or anyone running a validator node has to be chosen by Facebook. But they want Byzantine fault tolerance, so they created a new consensus protocol, not using any of the many other consensus protocols that are out there. Libra BFT, this approach builds trust in the network because BFT consensus protocols are designed to function correctly, even if some validator nodes, up to 1/3 of the network, are compromised or fail. So there is a theorem about 1/3 of the network. Like in any sort of permission validator system, if 1/3 of the network fails, there's no way to cause some sort of a chain split or something like that. So this is apparently like yet another Byzantine fault tolerant consensus protocol. This class of consensus protocols also enables high transaction throughput, low latency, and more energy efficient approach to consensus than proof of work used in some other blockchains. Notice what they don't say there. It's about unconfiscatability or needing permission here. You need their permission to get any transactions through. So if they don't like your transaction, they won't validate it. That's simply how it's going to work. So they're basically throwing out the most useful features, which is that you don't need to depend on anybody in order to create a transaction that sends from point A to point B, in order to have low latency, high transaction throughput, and energy efficiency. All of the stuff that's in Bitcoin, proof of work, the ability to send, and it taking longer time, all of that is there so that it can be decentralized. So they are highly centralizing everything in order to have low latency and stuff like that. But there's already a lot of other payment technologies that do that. So not really sure what they're trying to achieve here. In order to securely store transactions, data on the Libra blockchain is protected by Merkle trees, a data structure used in other blockchains that enables the detection of any changes in existing data. Well, I mean, Merkle trees have been used in lots of other things too. I'm not sure how it's really protected. You need somebody's permission, and if enough of the validator nodes decide that this past history isn't the right one, then they can go and change it. So it's not really protected in any sense of that word. It's just whatever the Libra Association decides is good. Unlike previous blockchains, which view blockchains as a collection of blocks of transactions, the Libra blockchain is a single data structure that records the history of transactions and states over time. So apparently it's not even a blockchain, because it's not really blocks of transactions. It's just a record of the history of transactions and states over time. So I'm not sure really what that means. There's no blocks. I guess it's a transaction chain or something like that. It's not really even a blockchain. Awesome. So I've counted like more lies than in this white paper already, or self-contradictions. It's not a blockchain, but they're calling themselves a blockchain. Okay, great. This implementation simplifies the work of applications accessing the blockchain, allowing them to read any data from any point in time and verify the integrity of that data using a unified framework. Okay, yeah, that's what running your own node means. And it simplifies what the validator node, I guess, has to do. But it's, they're kind of permissioned anyway, and you're expecting them to have $10 million. So I don't really understand what that adds, like making it maybe slightly easier for the 100 nodes that actually validate. All right, the Libra blockchain is pseudonymous and allows users to hold one or more addresses that are not linked to their real world identity. Sure, it's not, right? Except they're collaborating with regulators, so I don't really buy that. This approach is familiar to many users, developers, and regulators. The Libra Association will oversee the evolution of the Libra blockchain protocol and network, and it will continue to evaluate new techniques that enhance privacy on the blockchain while considering concerns of practicality, scalability, and regulatory impact. This sentence is very important, guys, because this is basically saying we can hard fork anytime we want for whatever reason, and you will have no recourse. So if you have money on Libra, they will hard fork and do whatever they want, and you really don't have any recourse, because apparently regulatory impact is a major concern. So thank you, Matt Manhattan, for the $1.99 that you gave me. All right, so let's see. For more details, read the technical paper on the Libra blockchain. Detailed information is also available on the Mu programming language and the Libra BFT consensus protocol. None of that makes any sense. I mean, it's completely centralized. You don't need Byzantine fault tolerance. You already trust the people that are on the thing. All right, we've open sourced an early preview of Libra testnet with accompanying documentation. The testnet is still under development and APIs are subject to change. Our commitment is to work in the open with the community and hope you will read, build, and provide feedback. Except, you won't let anybody actually contribute to the code. So, I mean, it's just, yeah, we're working out in the open, but we get to build whatever the hell we want. All right, let's look at the next section, the Libra currency and reserve. We believe that the world needs a global digital native currency that brings together the attributes of the world's best currencies: stability, low inflation, wide global acceptance, and fungibility. All right, so those are their 4 goals. Stability, so they want to peg it to something. Low inflation, which, if it's pegged, is already impossible. The first two things are in conflict. If whatever they're pegging it to is unstable, then yeah.
Hey, Jimmy,
Yeah.
Jimmy.
Yeah.
But 2% inflation per year is low inflation, right? By saying low inflation, they're already implying inflation. It's just the inflation that they decide is going to be.
Yep, that's what it sounds like. All right, why global acceptance? That's not something really that they can control. And fungibility, if it's being regulated, then I really doubt that that's really a big priority for them. But let's keep reading. The Libra currency is designed to help with these global needs, aiming to expand how money works for more people around the world. Okay, another meaningless statement that's feel good. All right, Libra is designed to be a stable digital currency that will be fully backed by a reserve of real assets, the Libra Reserve. Again, that's a real centralizing point. Wherever that reserve is, it can get seized, and then Libra is no more. And supported by a competitive network of exchanges buying and selling Libra. So this is probably where Coinbase comes in. And possibly Visa, MasterCard, and PayPal as well. That means anyone with Libra has a high degree of assurance that they can convert their digital currency into local fiat currency based on an exchange rate, just like exchanging one currency for another when traveling. Okay, so it's supposed to be stable, but you need to do an exchange. So it seems kind of like, why would you need to do that if it's already stable? This approach is similar to how other currencies were introduced in the past. To help instill trust in a new currency and gain widespread adoption during its infancy, it was guaranteed that a country's notes would be traded in for real assets, such as gold. Yeah, it's usually introduced as a new fiat currency with the old fiat currency convertibility or something like that. It doesn't, and the peg is almost always removed. So yeah, good luck with this particular historical analogy. They're basically signaling that whatever peg it has to the Libra Reserve, that it'll go away eventually. Instead of backing Libra with gold, though, it will be backed by a collection of low volatility assets, such as bank deposits, short-term government securities, and currencies from stable and reputable central banks. Yeah, this is exactly what we want, right, guys? Something that's pegged to fiat. All right, so this reserve is going to have that. Let's see what the convertibility is like. It is important to highlight that this means one Libra will not always be able to convert into the same amount of a given local currency. Libra is not a peg to a single currency. Rather, as the value of the underlying asset moves, the value of one Libra in any local currency may fluctuate. So it's not exactly a stable coin, but because Facebook operates in lots and lots of different countries, they had to use kind of like a pooled reserve strategy, which means that if any particular currency is fluctuating, their peg will probably also fluctuate or something like that. It's really like the sum of different ones or something like that. However, the reserve assets are being chosen to minimize volatility, so holders of Libra can trust the currency's ability to preserve value over time. If the central banks are all inflating, then your Libra is going to inflate at the same rate. So it's not really a very good store of value. That's what people are getting away from already. That's why they are getting into Bitcoin. So it's not really useful as a stable store of value, as far as I can tell. The assets in the Libra Reserve will be held by a geographically distributed network of custodians with investment-grade credit rating to provide both security and decentralization of the assets. Okay, so custodians and decentralized don't go together, okay? That doesn't make any sense. If you're custodying something, then you're the central point of failure. So instead of one single central point of failure, there's a whole network of single points of failure, any of which, if their government decides to seize their funds, then the Libra Reserve loses money. So you're spreading risk to a lot of different places. So it's not like all at once, but any one of those goes down, the value of the Libra goes down too. So, all right, let's keep going. The assets behind Libra are the major difference between it and many existing cryptocurrencies that lack such intrinsic value and hence have prices that fluctuate significantly based on expectations. I'm not sure like what they're trying to do, but well, actually I do. It's basically creating a stable coin. They're just saying that our stability is a virtue, and this is meant for a method of payment or something like that. This is Roger Ver's wet dream here. And I mean, maybe he's gonna get on Libra since BCH is having some problems. So I don't know. Libra is indeed a cryptocurrency, though, and by virtue of that, it inherits several attractive properties of these new digital currencies: the ability to send money quickly, the security of cryptography, and the freedom to easily transmit funds across borders. They notice that they're leaving out one thing, which is that you don't need anyone's permission to send this stuff. You do need permission on the Libra system of Facebook and many others. So it's not really, that's not the major attractive property. It's not really a bearer instrument because it's backed by the stuff that could be seized at any time. It's really just the payment rail. It's PayPal 2.0. Not surprising given that David Marcus was in charge of this. Just as people can use phones to message friends anywhere in the world today, with Libra, the same can be done with money instantly, securely, and at low cost, but not in a decentralized manner, not permissionlessly. It is completely permissioned. So, I mean, as long as you're in Facebook's good graces or Libra Association's good graces, this is all fine and good. It's not really for anybody that's outside of that realm, though. So I'm not sure what that's. I mean, it's sounding more and more like Apple Pay to me. Interest on the reserve assets will be used to cover the cost of the system. Oh, okay. Ensure low transaction fees, pay dividends to investors who provided capital to jumpstart the ecosystem. Read the Libra Association here, and support further growth and adoption. So apparently the reserve asset interest is going to pay back all those people that pay $10 million to be a node. How that's going to keep the transaction fees low, I don't really understand. If I mean, I guess it's going to cover both low transaction fees and paying dividends to the quote unquote investors. But it's a peg currency. So, I mean, other than the interest on it is going to be tiny. It's like what, 1% or something like that, unless there's like gigantic amounts in this thing. Doesn't really make any sense unless they're also lending out on some sort of fractional reserve basis, in which case that would work. But then that would not really be fully backed. So at that point, you would be, taking on a lot more risk. The rules for allocating interest on the reserve will be set in advance and will be overseen by the Libra Association. Okay, so the Libra Association controls the money and they get to do whatever they want with the interest, I guess. Users of Libra do not receive a return from the reserve. So, in other words, if you keep your money in Libra, you're not going to get any interest. So it's a terrible store of value. For more on the reserve policy and details of the Libra currency, please read here. All right, the Libra Association. This is probably, I mean, like every heading is like kind of, okay, here are the central points of failure, despite us saying that we're decentralized. All right, to make the mission of Libra a reality, a simple global currency and financial infrastructure that empowers billions of people, the Libra blockchain and Libra Reserve need a governing entity that is comprised of diverse and independent members. The governing entity is the Libra Association, an independent non-profit membership organization headquartered in Geneva, Switzerland. Switzerland has a history of global neutrality and openness to blockchain technology, and the association strives to be neutral international institution, hence the choice to be registered here. Somehow, centralizing in Geneva, Switzerland makes them better than others or something like that. That's what they're trying to say. Centralization itself is the problem, guys. This is a ridiculous statement that this somehow makes it decentralized. The association is designed to facilitate the operation of the Libra blockchain, to coordinate the agreement among its stakeholders, the network's validator nodes, in their pursuit to promote, develop, and expand the network, and to manage the reserve. So you are basically trusting that the Libra Association has your best interests in mind and have to trust them in order to make this all work. The association is governed by the Libra Association Council, which is comprised of one representative per validator node. Together, they make decisions on the governance of the network and reserve. So it's kind of like a Senate. It sounds like proof of stake. So yeah, I mean, that makes sense. they are the ones that are overlords over all your Libra. Initially, this group consists of the founding members, businesses, nonprofit, and multilateral organizations and academic institutions from around the world. All decisions are brought to the council, and majority policy of technical decisions require the consent of 2/3 of the votes, the same supermajority of the network required in the BFD consensus protocol. So in other words, they control everything. If they say, we're going to seize half of your Libra reserve to go blow it on coke and hookers, then they can, and you have really no recourse because this association controls the reserves. So as users, you don't really have any rights whatsoever. I mean, it's kind of worse than the Senate because at least you vote the people into into those positions. These people are on there permanently, or I don't know, maybe it's not permanent or whatever. They can do whatever the hell they want with the money that quote unquote belongs to all of the people that own Libra. But yeah, I mean, gosh. All right. Let's see. Through the association, the validator nodes align on the network's technical roadmap and development goals. So they can hard fork at any time based on whatever the association says. In that sense, it is similar to other not-for-profit entities, often in the form of foundations which govern the open source projects. Yeah, those foundations are what make all those other cryptocurrencies completely centralized. As Libra relies on a growing distributed community of open source contributors to further itself, oh, so they are taking contributors, or is it just, I mean, like, I didn't see any way that, like, normal people could contribute. The association is a necessary vehicle to establish guidance as to which protocols or specifications to develop and to adopt. So in other words, if they don't like the changes that you propose, they can just veto it altogether. So they control everything, including the technical stuff. The Libra Association also serves as the entity through which the Libra Reserve is managed, and hence the stability and growth of the Libra economy are achieved. So they control the money. The association is the only party able to create, mint, and to destroy, burn Libra. So they can print coins at any time. Coins are only minted when authorized resellers have purchased those coins from the association with fiat assets to fully back new coins. Okay, so that's the rules, but I mean, they control the reserve, so they can do whatever the hell they want. Coins are only burned when the authorized resellers sell Libra coin to the association in exchange for the underlying assets. So this seems to be the way the peg works, is that if you are some sort of special entity, you have rights to redeem your Libra for whatever underlying assets that exist. Since authorized, so these are authorized resellers. Yeah, very decentralized, guys. Authorized resellers. Since authorized resellers will always be able to sell Libra coins to the reserve at the price equal to the value of the basket, the Libra reserve acts as the buyer of last resort. Oh my goodness, this is exactly what a central bank does. That's hilarious. These activities of the association are governed and constrained by the reserve management policy that can only be changed by a supermajority of the association of members. So the Libra Reserve is the buyer of last resort. It's probably not quite as bad as what it sounds like. At least in a central bank is the lender of last resort or something like that. They're just buying back the tokens and giving them the assets back instead of finding some other new buyer or something like that. But you need to be an authorized reseller in order to convert Libra to the underlying assets. And I'm sure it's going to have a lot of friction, so it won't be at exactly the peg, but this is how ETFs work and things like that. In these early years of the network, there are additional roles that need to be performed on behalf of the association: the recruitment of the founding members to serve as validator nodes, the fundraising to jumpstart the ecosystem, the design and implementation of incentive programs to propel the adoption of the Libra, including the distribution of such incentives to founding members, and the establishment of the association's social impact grant-making program. So they're saying we need some reason to exist, or we need some incentives for people to join and so on. They're not going to tell us exactly what those incentives are, but they exist. And, there's basically like a way for people to make money or something, and they're not going to tell us exactly how people are compensated or whatever, or maybe they will somewhere else, but it sounds very sketchy. An additional goal of the association is to develop and promote an open industry identity standard. We believe that decentralized and portable digital identity is a prerequisite to financial inclusion and competition. All right, so open identity standard created by the association. Whose permission are you going to need? The association. So it's not really like that open or permissionless. I mean, you need their permission to get this identity. So it's not really decentralized. So there's contradiction here. An important objective of the Libra Association is to move towards increasing decentralization over time. The decentralization ensures that there are low barriers to entry for both building and using the network, and improves the Libra ecosystem's resilience over the long term. As discussed above, the association will develop a path towards permissionless governance and consensus on the Libra network. The association's objective will be to start this transition within 5 years, and in so doing, will gradually reduce the reliance on the founding members. In the same spirit, the association aspires to minimize the reliance on itself as the administration of the Libra Reserve. So this paragraph is complete bunk, because what they're saying is at some point in the future we'll be decentralized. We don't exactly know how, but we'll somehow do it. Decentralization is really, really difficult. And they're hand waving over the fact that they are not decentralized at this time. They're sort of admitting to it right here by saying, oh, yeah, we have all these centralized things, but they'll go away over time. You think anybody is going to go away on this stuff if they have an economic incentive to keep the system as it is? And you think the users are going to be happy with that if it's been working for them at that point? So, I mean, this paragraph is complete nonsense, and it's the equivalent of campaign promises by a politician. That is completely worthless. What's next for Libra? Today, we are publishing this document outlining our goals for Libra and launching Libra.org as a home for the association and all things Libra. It will continue to be updated over the coming months. We're also open sourcing the code for the Libra blockchain and launching Libra's initial testnet for developers to experiment and build upon. There is much left to do before the target launch in the first half of 2020. The Libra blockchain. Over the coming months, the association will work with the community to gather feedback on the Libra blockchain prototype and bring it to production-ready state. In particular, this work will focus on ensuring the security, performance, and scalability of the protocol and implementation. The Libra Association will construct well-documented APIs and libraries to ensure users to interact with the Libra blockchain. The Libra blockchain will create a framework to collaborate development of the technology behind the Libra blockchain using the open source methodology. Procedures will be created for discussing and reviewing changes to the protocol and software that supports the blockchain. The association will perform extensive testing of the blockchain, which range from tests of the protocol to constructing a full-scale test of the network in collaboration with entities such as wallet services and exchanges to ensure the system is working before launch. The association will work to foster the development of the Move language and determine a path forward for third parties to create smart contracts once language development has stabilized after the launch of the Libra ecosystem. So basically, this association is saying we're going to work on all this stuff. We promise this is not any different than any ICO or token that's raised a bunch of money. Here's our roadmap. Here's what we're going to do. I mean, they never admit to the fact that they're completely centralized, but this is their roadmap. Together with the community, the association will research the technological challenges on the path to a permissionless ecosystem so that we can meet the objective to begin the transition within 5 years of the launch. Complete bunk. They have no idea how they're going to do it, and they're just hoping that research will reveal some way to do it. No one's figured it out, guys, other than using proof of work, which you denigrated up above. The reserve. The association will work to establish a geographically distributed and regulated group of global institutional custodians for the reserve. Yeah, adding more central points of failure than not. The association will establish operational procedures for the reserve to interact with the authorized resellers and ensure high transparency and auditability. So apparently you need to be an authorized reseller, which doesn't sound centralized at all. Oh, God. The association will establish policies and procedures that establish how the association can change the composition of the reserve basket. So apparently they can put whatever they want in their reserve with the money that they're getting. Thank you, Eli, for your $1.99. Not sure why that number is coming up. Libra Association. We will work to grow the Libra Association Council to around 100 geographically distributed and diverse members, all serving as the initial validator nodes of the Libra blockchain. So they will work to get people to pay them $10 million each and raise $1 billion. The association will develop and adopt a comprehensive charter and set of bylaws for the association on the basis of the currently proposed governance structure. In other words, there will be rules, people. And though you don't get to participate in any of that, you know, there will be rules that we promise to engage by. We pinky swear promise. We will recruit a managing director for the association and work with him or her to continue hiring for the association's executive team. If you have a managing director or an executive team, you are probably centralized, right? Like, this is like the most ridiculous, oh God. Most ridiculous claim. We will identify social impact partners aligned with our joint mission, and we'll work with them to establish a social impact advisory board and a social impact program. Again, this is a terrible signal. If you're having to do social good to virtue signal that your coin is something useful, then you are doing it all wrong. If you are actually useful, then you know, third world people will use it anyway, as Bitcoin has. How to get involved. The association envisions a vibrant ecosystem of developers building apps and services to spur global use of Libra. The association defines success as enabling any person or business globally to have fair, affordable, and instant access to their money. Okay, that is not what you're doing with all these permission things and all these central points of failure, but sure, that's what you're not going to be successful given what I've so far read in the white paper. For example, success will mean that a person working abroad has a fast and simple way to send money to family back home, and a college student can pay their rent as easily as they can buy a coffee. Okay, I guess those are things that you can do, unless the college student happens to have smoked weed once and, you know, the government says, like, we're going to confiscate that rent instead. Or if you are somebody working abroad and your employer, you know, their employer decides that, you know, they paid them too much, or they're about to leave or something like that, and confiscates that money because they're a validator node or something of that kind. Our journey is just beginning, and we are asking the community to help. Well, I mean, hopefully this video helps you. If you believe in what Libra could do for billions of people around the world, share your perspective and join in. I think I've made my perspective pretty clear. Your feedback is needed to make financial inclusion a reality for people everywhere. Well, I mean, your coin isn't going to help in that regard, really. If you are a researcher or protocol developer, an early preview of Libra testnet is available under the Apache 2.0 open source license, with accompanying documentation. This is just the start of the process, and testnet is still an early prototype under development, but you can rebuild and provide feedback right away. Since the current focus is on stabilizing the prototype, the project may initially be slower to take community contributions. So we're going to gatekeep the actual code until we're ready to release it, I guess. However, we are committed to building a community-oriented development process and opening the platform to developers, starting with pull requests as soon as possible. Well, okay, that's good. Thank you, Dora Polish Chuvkova. I know I butchered your last name, but thank you for the $2. If you want to learn about the Libra Association, read more here. If your organization is interested in becoming a founding member, which costs $10 million, or applying for social impact grants from the Libra Association, read more here. The association will work with the global community in the coming months and continue to partner with policymakers worldwide to further the mission. Conclusion. This is the goal for Libra, a stable currency built on a secure and stable open source blockchain backed by a reserve of real assets and governed by an independent association. Yeah, so this more than the mission is actually more accurate. They're basically creating their own like peg currency, kind of a meta stable coin or something like that. Our hope is to create more access to better, cheaper, and open financial services, no matter who you are, where you live, what you do, or how much you have. We recognize that the road to delivering this will be long, arduous, and won't be achieved in isolation. It will take coming together and forming a real movement around this pursuit. We hope you'll join us and turn this dream into reality for billions of people around the world. Thank you, Zotrak, for your $5 Canadian. All right, so Lots of things here. Tone, if you want to unmute, we'll talk about it. Let's get your impressions on this white paper that I just read. Well, actually, maybe you can't hear me. Yeah. All right. Well, all right. So first impression, this is very much like
No, Jimmy.
Yeah.
Jimmy.
Can you hear me?
What? Can you hear me?
I can hear you.
I can, but like I'm in a van and we're now driving back.
All right, so you have a really long delay, so I'm just gonna talk first, but wait until you're off the van, and then
I'm gonna keep it very short because I don't like interrupting people that are sitting around.
Okay, so
and
all right, so tone's very sporadic, so I'm gonna mute you, Tone.
My own YouTube channel.
All right, so here's my impression of what's going on. They're very much a method of payment coin. That's all it is, and that's what they're trying to be, and they're using sort of a basket of assets to make that work. And it's rather sad that they're using all of the buzzwords to try to give themselves credibility. But this is I mean, this reminds me a lot of like Apple Pay or something like that. So, but at least Apple Pay had actual merchants that were accepting it and stuff. This sounds like a disaster waiting to happen because there are so many single points of failure. And there are so many ways in which this can be co-opted or by governments and used in ways so that all our financial privacy is like completely kaput when this comes through. So, I mean, like if I were a central bank, this is how, or if I were the IMF, this is how I would design a coin, right? Like having some association that's quote unquote international that does stuff or whatever. And it's really just kind of a regulator's wet dream to be able to go in and see everybody's transactions, and it's quote unquote pseudonymous, but there's no real guarantee of it. I don't know. Let's just say I'm not bullish on Libra. It's not supposed to really fluctuate anyway. Anytime there is, if it's trading for, if the Libra is trading for more than the basket, then people will just, the authorized resellers will put in more basket currency and sell it to the market. And if the Libra is below, then they'll take the Libra and sell it for the basket. So it's supposed to be kind of stable. So there's no real speculative value. It'd be kind of like investing in Tether or something like that. So, yeah, I mean, I don't really think that there's any real speculative element to this, which will probably deter traders from coming in on this. Yeah, I don't really get the. I mean, I get what they're trying to do, but like I think this is the complete wrong approach, and this is like just ripe for all sorts of corruption. I think pretty much any government that has part of that reserve within their territory has leverage over the Libra, and will be able to go to the association and say, okay, I want you to ban these transactions. And if you don't, I'm just going to seize the reserve bank that's here. I mean, it's the complete opposite of decentralization. You're creating way more way more single points of failure and so on. So yeah, it's so ridiculous. And here I'm gonna stop sharing for a sec so you guys can see me. But yeah, it's a coin that looks like it was designed by a central banker or somebody from the IMF or one of these globalists that want like one universal currency. It really doesn't seem that different than like special drawing rights or something like that, except maybe a little bit more convenient. I mean, there's authorized resellers, there's a Libra Association, there's a Libra Reserve. These are all single points of failure, guys, and it doesn't really make sense to call it anything like what Bitcoin is, which is actually decentralized. Tone, let me, do you want to unmute and say something? I'll try to just stay quiet for like a couple minutes while you do it.
There's really not much to say. I hope you guys are getting my audio in real time. There's really nothing to say. It is. I mean, at least using the US dollars, right? I mean, these guys are just making up a useless currency. The world needs another currency, like it needs another language, right? Unless it's somehow innovative, which Bitcoin is. So, like, this whole paper is just ridiculous. Like, there's really almost nothing to say.
Yeah. Yeah, I think we have his opinion here. It's basically completely ridiculous, and it doesn't really make any sense. So I'm not sure what they're trying to do. I expect it to flop very similarly as like Apple Pay. A lot of young people really aren't on Facebook, but they are maybe on Instagram or something like that, and they're going to try to make it so that people, I don't know, maybe there are people that will post new pictures more frequently if they get paid or something like that. This just seems like a complete disaster, and or like a disaster in waiting or something like that. You know, at some point somebody will seize the Libra, and then, or the Libra Association will pay themselves lots of money out of the reserve. Or, I mean, there's all sorts of like ways in which it can get corrupt. And this is exactly what Bitcoin is fighting against. They're introducing all of this governance and all these single points of failure. It's taking a step backward from what Bitcoin is, which is actually decentralized. So anyway, yeah, it's insane that people are so excited about this. They do have a lot of reach. And it sounds like there's going to be some sort of transaction fees anyway. So I just don't get it, or not really get it. I do get what they're trying to do. I just don't think it'll be successful in any way. So yeah, that's about it, guys. I wanted to read through this white paper with you. I didn't think it would take like an hour and a half to do so. But yeah, it's just so ridiculous that this has gotten so much press. But I suppose that's what happens when you're a multi-billion-dollar company. Tone, you wanna say goodbye? I mean, you're coming in kind of stuttered. I know you're still in a van and stuff, but you know.
No,
okay.
It's all right.
Oh man, his 4G
I'll
kind of
mention
sucks.
it on my next stream.
Okay.
But
yeah.
It's hold on. How about now? Is this better?
No,
Is this better?
it's a little better.
Look, it's even worse than I thought it was going to be. It's dumber technologically. It's dumber economically. It's just ridiculous. I'll cover it a little bit. It's not even worth discussing. Like, it's nonsense.
Yeah. So a few things we learned: it's not really a blockchain. It's not really decentralized. It's like kind of like a stable coin, but it's not pegged to anything. It's I guess its own thing. I don't think it will be successful, but you know, obviously I could be wrong. Who knows how people use it? But you don't make any interest on the money that you have in there, and supposedly the interest will pay out all of these people that are involved, which I really doubt. I mean, the level of transactions would have to be enormous.
Oh, Jimmy, its success is irrelevant. It's like if the Chinese yuan is successful at becoming the next world reserve currency, like, so what? Who cares?
Yeah. All right. All right. So, all right. I think that's about it. Thank you for the 300 plus people that were watching live. You know, I'll try to maybe dissect some other stuff. Thank you, Jesse. Wow, Jesse Powell. gave me $99.99. Thank you. He's the CEO of Kraken. So yeah, thank you for watching the stream. I will, maybe do the same for the Libra blockchain white paper and the Libra reserve if you guys are interested. Seems like a lot of people liked it. Thank you for watching. Thank you, Tone, for being here. And thank you guys for joining me in this chat. I didn't think it would be quite this popular, but I guess there's demand for stuff like this. So anyway, thank you for watching. This song is done.